In the newsroom. In 2008, economists coined a phrase they've been using ever since. Whenever nations feel a wrecking ball may be headed toward their economies, they ask, is it a Lehman moment? From that split-second decision 3 years ago to let the Wall Street investment bank fail, the U.S. government unwittingly unleashed a financial cataclysm on the world. Today, attention turns to Europe, with leaders no longer denying speculation the Greeks cannot pay what they borrowed. This Monday, European markets tanked, hitting a 26-month low here in Paris. The bourse battered by the losses of French banks who lent heavily to the Greeks. When government ministers find themselves having to deny, there you see the chart over the last 5 years there. When government ministers find themselves having to deny the partial privatization of French banks, it's pretty fair to say Europe may now be approaching a Lehman moment. Or is it? Is a surefire way to somehow wipe the slate clean? Or is the whole concept of a common currency for Europe really coming apart at the seams? It is crisis time, and today in the France 24 debate, we're asking whose default is it? With, from London, Jan Randolph, Director of Sovereign Risk Analysis for IHS Global Insight. Welcome back, sir.
Good evening. Peace be with you.
Also with us from Athens, Nikos Vernikos, Chair of Greece's International Chamber of Commerce. Welcome to the debate.
Hello, Paris.
And here in Paris, Monsef Cheikhou, he teaches economics and international finance at Paris's prestigious HEC School of Management. Welcome. And let's welcome as well France 24 Europe editor Christophe Robit. By the way, you can also weigh in on the conversation, as always, on the France 24 Debate Facebook page and on Twitter, where our handle is @FrancoisF24. Let's go to Jan Randolph with a very simple question. Please explain to us laymen here, what is happening to French banks?
French banks are exposed to Greek government debt. They've bought in the past Greek bonds, and they're one of the largest foreign groups involved in carrying Greek sovereign debt. Just over a third is held by domestic Greek banks. And the remaining third shared between more or less French banks and German banks, and the rest are bits and pieces also overseas and foreign banks. So whenever there's issues to do with Greece, to do with how much money it's got left, whether it needs another bailout, this affects the value of Greek government bonds and therefore the value of assets on French banks. Now, if on a mark-to-market basis, if French banks had to mark down their Greek government bond assets, that would also compromise their capital. And as a consequence, we've seen their share prices go down.
Share prices go down, Jan Randolph, 10.6% down on the day for Société Générale, just to give one example. Société Générale has lost half its market value since the month of July. Is that reflect reality?
It partly reflects reality. It also reflects sentiment, which has got worse. It also reflects uncertainty. The fact that if you don't know the value of something, you assume the worst. So it's a combination of the two. All the financials, all the stock markets have been down this year. That's related to the fact that back in a year ago, when quantitative easing QE2 over in the United States pumped in $600 billion. That flooded the financial markets. But since then, this hasn't been the year of great recovery, strong recovery. So equity prices went up far ahead of economic reality, and now they've come back down again. Now, with the poorer economic outlook, that also compromises banks' earnings prospects, because their earnings prospects are dependent on their clients' earnings prospects. And if they're weaker, that means the bank's earnings prospects are weaker. At the same time, they're caught with their existing holdings, investments, exposures, if you like, to the troubled Eurozone governments, bonds.
When I listen to Jan Randolph, Monsef Cheikhou, I don't see light at the end of the tunnel.
Wait. When you are talking about talking to layman, I was thinking of Lehman. And your question was, are we in a Lehman type situation
Are
today?
we approaching a Lehman moment?
Right, and this is a tough question. Greece today represents about 2% of the European debt, of the European GDP, sorry. And its debt, which is 150% of GDP, represents 3%. So in terms of arithmetics, it's not scary. Where is it scary? It is scary if it is decided that Greece leaves the euro. It is the shock of one country leaving the euro, and two, it is the cost of leaving the euro for the others. So the remaining countries in Europe, in the Euroland, today are trying to figure out the costs for them if one country had to go, quote unquote, bankrupt. And this cost is extremely high today. So finding all the ways to help Greece solve the real problems and not merely have some alcohol on the wound and say, go back to school, is the real issue. Greece has to figure out a way to restructure its economy, to take care of the 24% people who are already underprivileged and who cannot give more to the government, and to have more people pay taxes when they can afford it. So a real restructuring of the Greek economy has to be taken place with a new Ministry of Finance in Europe that is missing. You cannot be a large, richest area in the world called European Union without having a Ministry of Finance today.
Sorry, so more teeth for Europe's institutions. We'll get back to that point. I want to ask Nikos Vernikos, when you hear the tone of the worries that we have here in Paris over what's going on, is there a disconnect between the pain that you're feeling back in Athens?
I'm going to be very frank with you. The fact that everybody is worrying about what is going to happen to the Eurozone is something that gives hope to the Greek people, because we know that we have to reform. But in order to achieve these reforms, we need the support of our Eurozone partners. And thanks God, better late than never, our Eurozone partners realized what's going on in Greece, and they are going to take measures to protect the euro, and together with the Euro Greece. No one in Greece is thinking of leaving the euro. So everybody can rest assured that there is no such scenario from the Greek side.
But at the same time, for the first time, we're hearing politicians publicly talk about the prospect of Greece defaulting. Doesn't that scare you?
Greece defaulting, of course, it scares me. It's going to be catastrophe for the Greek people. But I am optimistic that our European Eurozone partners will find solutions to support Greece and thus support the Eurozone. It doesn't mean by any way that I believe that Greece has not to make reforms, and Greece has to really work hard to find better days for the Greek people in front of us. But I'm optimistic because Greece today is the laboratory where the Eurozone is testing what has to be done in order to protect the Eurozone. As we say in French, there is no il n'y a pas du mal sans du bien. There is no bad without good.
Nothing like a crisis to concentrate the minds, in other words. Investors knew it would be a brutal Monday for French and European banks. But as the saying goes, and here's part of the problem, the discourse of politicians, denial's not just a river in Egypt.
Greek sovereign debt does not represent a threat that would lead to recapitalization of any bank outside Greece. We must really get this idea out of market operators' heads, if you forgive the expression. I think that all the European banks, and particularly the French ones, could recover from something far more serious. But the important thing is, we want the Greek plan to be executed.
Jan Randolph, do you agree that the French banks can recover without a problem from all this?
Well, it's true. If it was just all about Greece, then the Eurozone wouldn't be having the kind of problems it's having. The problem, of course, is that Greece can present contagion. And it's contagion not just onto French banks, German banks that hold directly the assets of the Greek government, but contagion spreads elsewhere. Financial contagion works through other levels, transmission levels as well. For example, it works through the minds of analysts in the markets. They look to other countries with high public debt and very little growth. Italy, for example, doesn't trade that much with Greece, but it was affected by deterioration in perceptions about what was happening in Greece. And so its borrowing costs went up as the long-term investors that hold Italian government bonds lowered their exposures. And that basically means new borrowing costs have to go up unless there's a fiscal adjustment, which is what they're being asked to do by the European Central Bank. When it comes to Greece, the European partners cannot really honestly be expected to give an open, indefinite blank check to the Greeks. The Greeks have to actually deliver, and that's the real issue. It's delivering on all the promises. It's delivering on all the good words. How much has Greece actually raised in privatization revenues? It's been over a year. It's not much, but they promised, so much. At some point, Berlin and other Eurozone governments will say, we are keeping you afloat here. Our taxpayers are keeping the Greek government afloat. We will question your political will to execute on what you've agreed to with us, the program for deficit cutting, the program for privatization. And, at some point, there has to be a litmus test here. And I think certainly the Berlin government has made it political litmus test for the Greeks to deliver by the end of the year, and in particular privatization.
And on that point, Nikos Vernikos, we saw that just a couple of, a little over a week ago, there was a troika of International Monetary Fund, European Central Bank, and EU delegation that cut short a trip to Athens, saying, you guys aren't going fast enough when it comes to privatization. How do you feel about that?
I want to assure all concerned that there is the political will for Greece to deliver. The majority of the Greek people are ready and they are contributing for this delivery. There are difficulties because, as I told you, Greece is the laboratory where all these social conflicts are being tested. The working class is realizing that they risk to lose whatever they have gained during the 20th century.
So was it unfair of that troika to cut short its trip?
No, the troika cut short its trip because they realized that there are political problems. There are political problems, not numbers. Unfortunately, the therapy that the troika gave to Greece is not the correct one. Nobody had thought of this big and huge depression. So there are negotiations on political issues, but I am sure that the government has the will to deliver together with a great majority of the Greek people. We know that we have to reform. I want to assure all concerned that there is no way that the Greeks are not going to deliver. What we want is some passion from our Eurozone partners and understanding. And everybody is going to be proud for having assisted Greece and found the right recipe for assisting the other countries that will follow.
Let me put this to Christophe Robit. You've been following this. There was an EU summit, an emergency one back in July. What's the word on the street when it comes to the pace of those reforms among the politicians?
Well, I think we are witnessing a psychological war, and clearly European leaders, particularly the Germans and the Dutch, are losing patience. Now, I understand from a Greek point of view that it is very hard. And if Greece is a laboratory, the experiment must not be very pleasant. But there is indeed a sense of frustration. The reforms are not going fast enough. The privatization scheme is not taking place the way it should. And I think when you hear the Vice Chancellor of Germany, Philipp Rösler, yesterday openly saying that we could well devalue Greece, I think he's serious. That's only what his party thinks. But it's also a very clear message to the Greek. We are serious. If you don't deliver, we will have to take very radical measures. But I think beyond the political element, there's also the message that the markets are sending. And despite the summit you were referring to, and despite positive developments in recent weeks, when the court of Karlsruhe in Germany endorsed
Germany's highest court.
Absolutely endorsed the first bailout plan. Well, that was first regarded as a positive step. It's the German law, the German judicial saying that that basically it is right to bail out Germany, to bail out Greece. So yeah, a great deal of frustration, and of course, as if you are German, I think it is hard to understand why you have to pay for the Greek. But at the end of the day, and that's maybe where Angela Merkel, I think, has really failed. She has failed to explain to the Germans what the situation is. It's one thing to say we don't want to pay, but what will the cost be if Greece and the euro unravels?
Nikos Vernikos, let's give just a concrete example here. You're in the shipping industry. Should tax exemptions for the shipping industry in Greece be lifted?
There are not tax exemptions. The Greek shipping industry is being taxed in a similar way like other OECD and other European countries are. The Greek ship owners pay taxes according to the tonnage of their vessel, irrespective if they are losing money or if they are making profits. Shipping is a cyclical business, and Greek ship owners pay steadily every year, irrespective if there are profits, and they are not having subsidies from the Greek government. The bottom line for the Greek ship owners, compared, for example, with the French ship owners, is that the Greek ship owners are paying much more taxes than the French, who are taking subsidies. So, and anyway, it's not the Greek ship owners who are going to save Greece with its huge debt, which came out of the money that was sent without any due diligence for decades. Greece was receiving money from the European Union and the European banks at the same rate like Germans. Greeks had to spend 6 or 7% of their GDP for national defense because the European Union was not guaranteeing the borders of Greece. Germany did not pay anything for national defense for the last 65 years. Greece was getting the money from the European partners to buy arms from France and Germany. We have to consider all these things. That's why I say it's not pure arithmetic. Irrespective of this, Greeks realize that we have to reform. Greeks realize that we made mistakes.
I'm going to have to interrupt you for just a second, Nikos Vernikos. Hold that thought. We're going to continue our discussion, and when we come back, look also at what some of the solutions now looking forward will be. Stay with us.